Moving on, we're going to speak about hashing and mining, and it is actually a panel that is coming out. It will be moderated by Mr. T.N. Lee, co-founder of Dana Labs, and the panelists are Xing Zhu, which is the co-founder of Sparkpool and CEO. We have Samson Ma, the Chief Strategy Officer at Blockstream. We have Kevin Shao, General Manager at Canon Blockchain and Canon Creative. And finally, Mr. Ryan Condron, CEO of Titan. A big, big applause and welcome our panelists on the stage.
Hi, good afternoon, everyone. I am Tien, the moderator for today's mining panel. So really want to thank everyone for being here to join us for this particular session. Now, so the objective of this session here today is really for us to get a better understanding of the mining sector, because the mining ecosystem has been a major and important part of the entire blockchain ecosystem, yet it is somewhat elusive to a lot of us here. So we are extremely privileged to have distinguished guests from different parts of the world who are very, very involved in the cryptocurrency mining aspect. So what I'll do is I'll just do a very quick introduction of our guests and then proceed with the questions. So starting from the left is Xu. So Xu is CEO of Sparkpool, one of the largest mining pools globally. So here's Samson from Blockstream, a leading Bitcoin and blockchain technology company with involvement in various aspects, including that of mining. So here's Kevin. He's with Canon, one of the largest mining equipment manufacturers globally. And of course, we have Ryan from Titan Mining. So Ryan's company produces software to help large-scale mining operators manage operations and the hardware more effectively and efficiently. Now, without further ado, I'll start with the question. So I think in cryptocurrency mining, right? There are usually two major cost components: the hardware costs and the electricity costs, right? Now, in the last few years, we're starting to see that the large-scale mining operators are able to capitalize on these cost components better than the retail miners because of their economies of scale. Now, so I'd like to hear from your perspective, right? Do you think that these factors are affecting the decentralization of mining, and do you think it's a bad thing? Who first? Maybe you?
Sure. So I would say if you think of mining like manufacturing at scale to drive those economies of scale obviously have benefits, and that is why mining will tend towards centralization, because if you want the cheapest power, you need to be able to build your facility, build your mining farm where the power is available, and you need CapEx for that. So the average retail miner probably doesn't have access to the funds to do so, or even to negotiate those power deals. So the tendency is towards mining to become more centralized, but I think it will be better over time as the overall tech and experience how to set up a mining op becomes more distributed. People know how to do it on smaller scales. Maybe it would be a container, but someone could potentially mine with a container. For us at Blockstream, when we set up Blockstream Mining, one of our goals was to help with some decentralization. So we want to host people that otherwise may not set up the facility. And our end goal is that we can host people with, like, say, 10 miners. So those retail miners could buy their equipment from somebody and host them with us. And we want to kind of be a very simple over-the-counter service where you just send them to us, we rack them up, and that's it.
Okay. My source is that for the Bitcoin, the centralized mining, I think it's not good to the Bitcoin, good to the consensus. For a long time, when in 2013, I just began to mining, I just buy one machine in my home. I can do the mining, but right now, I think for retail miner, their entry condition is very difficult to do the mining in some place. They need to host their miners to some big mining farm that they can lower the cost and get the cheap electricity. This is for the industry development, the things would happen. But for example, in the past, what's happened? In that time, one mining pool, his hash rate is reached 50% of the total network. But in that time, the community, they just move their hash power to other place. This is why the community, they want to make the safe about the network, so they will do the things. This is consensus about Bitcoin. And right now, so although the centralized mining is happened, but we also find some new things would happen. Some cloud mining. These mining service companies, they want help some retail miners to get the access to the mining world. So they help them lower the cost and get the condition about how to do the mining more better than themselves. I think it's a good thing. So in the future, I think it will be changed if we will do more things, include us, Canada, we will do more research to develop more better equipment for the miner to lower the cost and to produce more effective machine for them. This is which we want to contribution to the industry. This is my thought. Thank you.
So can I just interrupt? So based on the input from both of you, right? I gather that you are coming in the capacity of a service provider to try to encourage more and more people to participate in the mining ecosystem because of the facilities that you put up with, the kind of equipment that you're manufacturing, so that the barriers to entry for people is actually lower. Now, so I also, so in your opinion, right, at least in the last few years, do you think that there has been more retail investors, or are you also seeing that the financial institutions, like large-scale financial institutions, are also coming into the space through some of these avenues that you've provided?
Right, so I think there is definitely always been kind of this retail, it's better to say hobbyist interest in mining. So a lot of people do mine out of their garage. They post pictures of their little mining machines and some venting system they set up and some way to dampen the noise. But we are seeing bigger players come into the space. So when we announced Blockstream Mining, one of our customers that we've publicly disclosed is Fidelity, and Fidelity is a pretty big player. And I guess with our offering, like hosting people, it allows people that may otherwise not be mining, because it's a very specialized industry. You have to have a certain expertise to set up, build out, and manage it. And like Fidelity, maybe they would not do it on their own, but they chose to work with us and be a customer of Blockstream. And then there's also Reid Hoffman, right? He's a VC, co-founder of LinkedIn. He probably wouldn't do it on his own, but he does believe in Bitcoin, and he wants to mine Bitcoin, so he can do so with us. So it kind of opens the door to more people coming into mining, I think.
What about you, Xu-Xing? Have you seen some of these trends moving in your favor?
Yeah, of course. In my own business, we see about we currently own about 30% of the Ethereum hash rate, and we have, I think, about 20% from a single digit of clients. Like they are big capitals or even big listed companies, and so in the term of centralization, of course, it's happening, and I don't think we can stop it. We can help it, to become slower to be centralized, but it's something we cannot stop. It's the incentive of the capital. It always flows to the more efficient part. But in my opinion, the difference compared to before, like when people mine in the garage, those miners, they have their faith or belief in blockchain or Bitcoin or Ethereum or whatever. But now more capital, and they don't really hold too much cryptos. They are no coiners. They care about how much investment they have there and what's the return in USD maybe. So if like Kevin just said, people might move from one pool to another to avoid the 50%. But I think in the future, maybe if people don't really care that much about that part, if they only care about capital return, then they will only flow to the highest, most efficient or most profitable pool. That's going to be a problem in the future.
So I have a lot of thoughts about both these questions. So let's start with your first question and just talking about the costs. So yes, we have a fixed cost with electricity. You can calculate that out in profitability. The other cost is hardware procurement, which is constantly changing based on hardware manufacturers and how they want to price their hardware at any given moment. Interestingly enough, we see a lot of, I'm not going to get into that. Anyways, but there's other costs there, especially at scale. So I can actually run incredibly lean in my addition with 20 ASICs and with extension cords running all over my house, and I can keep those on board, and I can actually be incredibly profitable like that. The moment and my management costs are low, and the key is we always leave out management costs because it's a big part of mining is staffing the facilities, keeping your neighbors happy with sound issues, making sure that you don't have a downtime with your miners, cooling costs, facility management, all these things play in at scale, which the hobbyist miners don't see. So, historically with decentralization, centralization, the idea of being ASIC resistant was always a big thing because we thought that everyone has GPUs, everyone has CPUs. If we stay ASIC resistant, we can keep things decentralized through just keeping things distributed. Well, as the other panelists said, we're not going to be able to avoid that. Cheaper electricity. People will always gravitate towards better economics and favorable regulation. So you have certain governments that have come out in favor of mining, so you're going to naturally see more mining facilities pop up there. We have certain areas of the world that have cheaper electricity, whether it be hydrothermic or hydropower or whatever. You're going to see mining facilities naturally pop up there. The reality is we're not going to have a shortage of distribution. We're going to have mining facilities literally all over the world. But we're going to have a shortage of decentralization. And that was my whole talk yesterday, and that's really what we're working on with Titan is providing greater accessibility to control the hashing power to keep things decentralized. Because you're never going to be able to decentralize the devices, but you can decentralize the control through protocol mechanisms.
Sure, thank you. What about the aspect, like, because you're working on Titan, which is a software, and also do you also see that like there's more institutional interest coming into the mining sector?
Yeah, absolutely. Just like Samson was saying with Fidelity, we see institutions wanting to get involved. I mean, if you think about it, we're building the next generation of banking. We're building the next generation of financial infrastructure. Banks and transaction processors is where that's where they make their money, is transaction processing. If banks and institutions aren't involved in transaction processing, if they're not involved in controlling the flow, which is mining, then where are they in the next phase of the ecosystem? So, I mean, yeah, if you think out into the future, yeah, I really see institutions wanting to get involved in mining so they can actually control flow of transactions.
Sure, thank you. So the next question that I'd like to pose, right, is with regards to halving. So, so for the benefit of the audience, halving simply refers to halving the block reward for every Bitcoin mined. So currently, the Bitcoin reward is 12.5 for every block mined. So when halving occurs, and after that, it will be 6.25 BTC per block mined. So as it seems, from the past trends, generally before the lead up to the halving, there's usually an upward trend in the price, and probably sustain, like it might even sustain through the fork. Sorry, not fork, but the halving. So I just would like to ask of your opinions, because all of us here are involved in the cryptocurrency mining aspect, and this halving thing is probably one of the more anticipated events that happen in the coming future. So how do you deal with this prospect, and what are some of the measures that you are working on currently to anticipate for that change?
Okay. I say first, because as I'm an earlier miner, I just began to mine in 2013, so I experienced one halving. Yes, it's the law of the Bitcoin, because every 4 years it will happen. From the historic date, we can see after the first halving, the Bitcoin price they just increased about 4,500% than before. This is the first. The second, after the second halving, the price is increased 1,500% about the halving. So the third halving, what will happen? We can expect maybe the price will big increased, but how much right now we don't know. We can expect. But for some miner right now, what they can do prepare for the halving, I think. First, they need to change their strategy to about their machine. Maybe some last generation machine is not suitable for the new things happen, so they need to upgrade their machine, prepare for the next halving, and also they need to prepare some money to do some decision. If that would happen, they can buy more Bitcoin or buy more machine. I think it depends on in that time the price what will happen. So this is the big things in Bitcoin miner area. So we needed to do more prepare before it would happen. Yeah, it's my opinion.
I don't have too much insight about Bitcoin mining or halving because I don't mine too much Bitcoin. But the similar stuff happened in Ethereum as well. We call it the reward reduction. So it was 5 Ether, 3 Ether, and now 2 Ether maybe. And in the future, it will become smaller and smaller due to all reasons. But besides the price of crypto, I would say that this problem actually reflects to the question before. That will drive the miner to a more efficient mining way. So otherwise, they will lose the money because it directly reduces their profit, not cost. So their profit margin will drop significantly after the halving or reduction of reward. So miners have to be more efficient to try to find a cheaper electricity, higher profitability pool, or more efficient way to manage all the facilities or rigs. So they're all connected, and all those halving or reduction will drive the mining more centralized, in my opinion, besides the price.
So I think when it depends a lot on the price. If the price goes up at the halving, then it's not a big deal. But in general, you don't prepare for a halving. You generally try to prepare by having the lowest OPEX possible and the cheapest electricity. You don't really prepare for the halving. The thing that helps a lot is if you have the current next generation equipment close to release, because then you're more likely to be profitable at the time of the halving. So I know a lot of people that bought current gen stuff when it first came out have almost recouped all of their cost. So they're not really worried about the halving because they've already recouped their initial expenditure on buying those ASICs. But for people running older equipment, it's likely that they might need to shut off depending on their electricity costs and operational costs. So we'll see what happens. But if you look at the last halving, the actual point in time of the halving, we didn't really see a price movement. So it was priced in before. For this halving, it's harder to say because the market is very fickle. And I think when it's being priced in, it largely depends on people buying and their awareness of the halving and the implications. And I think at this time, we do have more awareness of Bitcoin in general. So it could be, you could say it's priced in now, or you could say it's not priced in now, but I would tend to think it's not yet priced in. I think we're going to see a run up.
Yeah. So especially with the halving, so we have two things happening. We have basic human psychology and business dynamics. When it comes to mining and you foresee your profits being cut in half and you know it's coming, there's only two things to do: is you cut costs drastically and you make sure that you have the best profitability that you can have. So cheaper electricity, you can only go so far with that. You can only really get more revenue in so many ways with mining. So what we're going to see is a massive reduction in costs. So they're going to have better software before I come in. They're going to have better hosting. They're going to have better, more profitable pools. It's going to be a cost reduction leading into it, and it's just general business dynamics of let's not go out of business is the start of it. The second part with like the price and where that's going to go is general human psychology, right? So the majority of what we see in our ecosystem right now is very emotional. That's why we see the price swinging the way we see it. It's a lot of FOMO. It's high highs and low lows and all over the place, which is great for trading bots and day traders because price movement makes them money. It's terrible for stability and people that want to invest in it because it's just an unknown wild card. So I've gotten into a lot of discussions with people asking, is it priced in already? Are we assuming that, is this why it's up already right now? No, I honestly think we are so emotional in this space at this point that we're very reactive still. So we're going to see profits. I mean, first of all, if I were to predict the way this is going to play out, is people are going to panic and start getting rid of all their old gen hardware. So we're going to see a bunch of old gen hardware flood the market, which is going to be a drop in the hash power on the different networks, which is going to be a reduce in difficulty. People are going to see that as a sign to plug their hardware back in. So we're going to see this weird fickleness of difficulty leading up to it. Eventually, people are going to start procuring more next-gen hardware, like from Canaan, and they're going to start building up their war chest, if you will, of hash power. But the actual onboarding of this hardware is going to take time, so the halving is going to happen. All their hardware is going to show up. They're going to plug it in, and we're probably going to see 3 or 4 months out, we're going to see a huge spike in difficulty in these networks because all the next-gen hardware is going to come online afterwards. And then we're going to see probably a huge spike after that of price. But I think it's all going to be very reactionary. It's going to be very delayed, and it's going to be a lot of driven from delay in shipment of new hardware and then FOMO of missing out on price increase.
So I would actually disagree with a couple things.
Okay.
So I don't think you said people will reduce their cost, but I think you can't really reduce your cost. If you're an effective miner, you're already running a good operation. So it's more that
we
have ineffective miners that either get shut down because they're ineffective or they become effective. But in general, if you're an effective miner, you've optimized. You don't run a messy operation because that just impacts your profits in general.
I wish I could say that was the case, but I've been all around the world talking to a lot of different miners, seen a lot of different facilities, and it's not the case. There is still a lot of overhead in facility management. There's still a lot of overhead in unoptimized mining. And you're exactly right. I think a lot of those people that don't optimize, that don't cut their costs where they can, are going to get shaken out because they can't compete. But there is still a large amount of hashing power out there that is not well managed.
Okay. And the other thing is, I think a lot of the old gen equipment, like S9s, are already being dumped on the secondary market. So right now in China, it's getting close to the, how do you say that? It's like the dry season. Right. So a lot of miners are already purging out the old equipment. But I don't think we're going to see next gen equipment for some time. I think we're already getting close to limits of the current gen, and I don't see any big advancement happening before the halving.
Well, I'm saying, I guess, when I was saying next gen, I meant, I guess, current gen, but like people moving from, say, like the S9s or the old gen basically into current gen. I think they're just going to have procurement issues, so it's going to take time for them to swap.
Right, but there's also production issues. So a lot of the ASIC manufacturers are having trouble getting chips from like TSMC and Samsung. So there is a bottleneck. So it's hard to say how much hash rate we'll have by the halving. I think it should be about 180 to 200 exahash by then, but because of production, maybe it'll just fall short. We'll see.
So I think we agree.
Thanks. My subsequent question probably will be more relevant for Kevin, and then of course Samson and also Shixin. So in general, like in the cryptocurrency mining aspect, there are usually two camps of people. One is like either they are ASIC pro or the other one ASIC resistant. So I would like to hear from you, right? So how do you think these schools of thoughts can whether there will be an equilibrium, or like do you think that one of those will be less relevant than the other in the coming time? Comparing like ASIC resistant and ASIC pro kind of mentality.
Okay. For us, we also consider about some new coin about if they have some plan to develop ASIC. We also have talked with some team about what's their strategy about to do this mining. And for us, for a long time, we find result is that if you use ASIC for top 20 and the top 30 coin, the POW is more better than other things. So most of them just use ASIC to develop their machine to POW. So right now we also want to use our ASIC advantage to help some new coin to use this to help protect their consensus in their community. So we think if a coin they want to be survive in the industry, so one is how to use ASIC to more people to use their coin, and another is he can make how big the community to support them. These 2 points is we consider if the coin we can to support them and to develop a new miner to mine their coin. This is we think is very important for us. Another we also think if just easy to simple to copy like Bitcoin and other thing, this is no use, no valuable in the market. For past and now, many altcoins just want to do the things, but it's not successful at last. So this is, I think, is you need to do some new things, a new innovation in the market, not just easy to copy. So this is I want to say, yeah.
So is there any sense in trying to be ASIC resistant moving forward?
ASIC resistant. I think Ethereum is pretty clear that they want to be ASIC resistant, but Vitalik decided to go to POS, so I don't think they spend too much time on the ASIC resistant part. But in my opinion, the reason ASIC happens is that people have the consensus that Bitcoin will not change the algorithm or whatever, so that they can drive to the very right without any elasticity, because we know GPU on the left without elasticity, and but less efficient, FPG in the middle, elasticity and efficient, and the ASIC in the very right with all the efficiency but with no elasticity. It can only do Bitcoin mining. But in things like Ethereum, if there's no consensus that the algorithm will never change, then there's not enough incentives for ASIC manufacturers to actually try to the very right hand, so that because the equipment they manufactured will not be actually working if the algorithm changed. And I think that's actually become a trend in the current crypto market, that all the chains they reserve the right to do something that actually that's the ASIC manufacturers to be less incentivized to actually produce ASICs. That's my personal opinion.
Sure.
Okay, can I go next? All right. There's this weird dance and partnership between the development community and the hardware manufacturers in this regard, where exactly Right, I wholeheartedly agree that if the money's not there because you don't know if the algorithm's going to change on the network, then there's no point in making an ASIC for it. But if we keep in mind like where we're going with this technology and how much it's going to drive the future of tokenized systems, right? ASICs means stability. Okay, at scale mining that's efficient and stable hash rate backing the network, it means stability. And it's something that you can scale and industrialize and build out in enterprise level systems versus doing something like GPUs. It's still crowdsourced, it's still very low level, and I don't see it playing out very well in the 10 to 20 year vision for this type of ecosystem.
Well, we'll figure that out along the way, because it's certainly interesting, right, to see how this kind of things unfold. There's definitely people who are very supportive of ASIC resistance, and then there's definitely some that want to remain ASIC centric. But I don't know, what would it be? I personally think there will be both this school of thoughts, they will coexist. It's just that as of now, from the way it seems, that the interest for ASIC is it seems to be there seems to be a lot more interest in ASIC hardware, because Bitcoin itself is the leader in the entire ecosystem, and they're ASIC. Yeah. But having said that, I have another question, and this one is directed to Kevin specifically. So Canon Canon has filed for an IPO on NASDAQ. I'm just very curious. What do you see in filing an IPO at this time of the year? And how do we expect any kind of changes from the company moving forward?
I'm sorry, so I can't say more detail about our IPO, but I can say for the industry, IPO is a very important thing for more investors and more normal people to know what happened in the industry, because it's a window to help somebody to know the truth about the industry. Because right now, everyone in China right now is very popular about blockchain, and this blockchain is different than cryptocurrency. But for our industry, if they want to become more mature, a very important point is if the industry has some big listing company would happen. So right now, for mining, maybe some company will be listed on the exchange. I think it's a very, very significant thing for us to know the industry. And after that, I think we can follow the regulation. We can do more legal things in this area. Before, I think the regulation for new things is not very suitable or good for us to do something, especially in different places have different regulation. But right now, I think we want to do more legal things in the future, and we want to help more newcomers and some financial institutions. They can do the invest in Bitcoin or in cryptocurrency. This we can help them to do things, because we want to make the business more legal and more acceptable for more people. Yes.
So, do you have any comments about the time of the IPO, around this period? Because now it's I'm not sure if now is a good time to do the filing, but has it got to do with the decision of the company to try to file for an IPO right now?
Not for this time. We prepare for this for a long time. Right now, we just prepared, so we do the things.
Yeah. So next question is for Xinshu, because from the perspective of mining pool, right? And you are certainly involved in several different coins. So could you just help us understand a bit more? How do you shortlist the kind of coins that you want to work on? like how do you evaluate the potential of the coins and whether you want to invest resources into getting the entire like miners to mine this coin?
Yeah, we are the largest Ethereum mining pool, right? And all our miners, they have their equipment in GPUs. So essentially, like the talk before, we said a lot of cryptos, of POW cryptos, they start with GPU mining and convert to ASIC in the future potentially, if it's profitable enough or stable. But actually, we want to stay neutral in the market as a mining pool, because if you have a lot of users, they have all the beliefs in you and they actually follow you. So the way how we stay neutral is we don't really talk to any projects. We just listen. But the way we choose them is if they can produce enough daily return, such as like maybe the benchmark is $200K US every day. If it can be stable in that way, that we are certain that our user, maybe part of them, could start mining the coin and still get their cut. Otherwise, we see too much, pump and dump to actually damage our user, because we are actually providing more service to our users, so we want to be friends with them. So that's also the reason why we don't have any BD with other projects, so that we don't really talk to anyone. So that's we only have 4 or 5 coins listed in our mining pool, compared to the other mining pools. They maybe have 100, maybe, I don't know.
All right, so I've just one last question that I wish to ask. So feel free to participate. So this one has got to do with the consensus mechanism, right? Because like in this year and last year specifically, we're starting to see more projects jumping onto the POS bandwagon, right? Yeah, so very curious to hear your thoughts. Like how do you think the POS and POW thing will play out, and what can POW do to stay relevant?
Well, I think proof of stake is a joke, but most people haven't gotten the joke yet. The argument is it's green, it's better for the environment. But then you could also make that same comparison that World of Warcraft gold is better for the environment than mining real gold. You can't compare, apples to a picture of an apple, right? So I don't really think proof of stake is a threat to proof of work coins, and people will figure out it eventually.
So I agree and disagree at the same time. I think proof of stake is a great idea. I think there's some inherent issues with it, though. A lot around distribution of the tokens or coins. But when you actually boil it down to what it's doing, is it's creating friction to prevent blocks from being created too quickly, right? It's a difficulty mechanism. So it's tying up potential to secure the network, whether it be stake, whether it be proof of work mining. I think the issue that we have with the narrative of proof of work right now is the fact that, it's not green, that we're burning electricity to get coins. I think we need to help the world understand that we're actually not burning electricity, but we're actually converting electricity into hash power. It's actually just changing the potential of electricity that's actually focused on a local grid, and we're moving it into a global decentralized system of hash power. So I think the narrative of proof of work needs to change and the way we communicate it. Proof of stake, I think there will always be a place for it in certain ecosystems, but I think just because the economics of proof of work, I don't think proof of stake will ever overtake proof of work. 10 years from now, you can rewind this and look at how I was wrong. That's fine. But for now, it doesn't look like it ever will.
My opinion is pretty neutral, even though we have been asking this question a lot, because Ethereum is definitely going POS. In my opinion, I think it's easy. POW is proven after 10 years. POS is unproven yet. So maybe, like you said, 10 years later, it's another story. But we have to give this choice to the developers. We should not all go all in with POW. We should do something else, be innovative. Otherwise, this industry also stops, kind of. So I'm fine. I'm neutral, even though I'm a miner.
So like, if in the case where, say, some of the coins that you're currently mining, they're shifting to POS.
It's happening. It's not a case. It's happening. Ethereum is definitely going POS.
So what would your options be as a mining pool?
We do have POS research team, and we do a lot of validating for different blockchains, and we see, like in the mining pool perspective, it's always about efficiency. If we can collect more transactions in the network, makes the blocks fuller compared to other pools. So it's actually, if you abstract from the mining part, it's still blockchain, right? It's still about blocks, propagations, transactions. So we try to use our existing advantage to apply to the POS validation process, because we do have this advantage in the networking perspective.
Quick question. How soon before we expect that Ethereum to jump over to the other side?
Can't tell, because in 2 years ago, I thought it's 2 years ago. So now
it jumped over to proof of stake 2 years ago.
Yeah, I thought I won't be mining now, but I'm still mining. That's sad, but it's okay.
Any more sharings from Kevin?
My thought is that I think POW and POS is different things. I think POW is more about currency. It's more about money. So we need to cost something and make something. And POS is more related about technology, because right now some smart countries, they don't have very good performance. So we need to improve the performance. So POS maybe it's a good way to do the things. So they are totally different. So if we want to hold our money, our wealth, POW is more better choice to do this. And if we want to do some technology to do some application, maybe POS is a good way. So they are totally different.
All right, thanks a lot for your participation in this panel. Let's put our hands to thank this panelists. Thank you.